Hello and welcome to Daily Finance Wrap. I'm Mubina Kapasi and this is your daily dose of personal finance updates covering investments, insurance, loans, real estate and everything else to do with your money. We also have, of course, expert analysis who talk about everything to do with personal finance. And in today's topic, we're going to talk about our younger days. We're talking about how one can inculcate wise financial learning to our children. We'll be focusing on topics around that and how you can develop finance as a foundation, which means teaching them financial literacy early so as to develop healthy financial habits later in life. We will also be taking viewer questions and queries. So, of course, you know what to do. Comment on that YouTube box over there. Send in your questions and we will get our personal finance experts to answer them. Well, in the next 30 minutes, we're going to be helping those parents that are juggling with making their kids financially prudent and also discuss what all went down in the markets today. Have Indian equities entered into that correction mode? Here are some of the top stories in the financial landscape that will perhaps impact the way you budget. So let's get kick-started then. First up, the Wall Street seems to be caught in this bearish grip. The Indian stock markets have been witnessing a correction. Well, it's the sixth day of losses really for the Indian equities, but we've been in this bearish mode for a good chunk of the last 1 month, and today was no exception. The Nifty and the Sensex have taken a tumble, with the Nifty still languishing below the 23,500 level, well, just at about the 23,550 level, and both benchmarks, by the way, have shed over 10% each from their record high levels. So that's quite significant. And I think even making the boldest bulls a little bit jittery. Meanwhile, in terms of the big laggards and the big movers, we have HUL, Britannia, BPCL that were losing in trade, while heavyweights like Reliance Industries, HDFC Bank did lend some support, along with auto names like Eicher Motors, Hero MotoCorp. Those really managed to buck the trend. So that's to do with the equity markets. We also, of course, do have new companies on the block that traded on the Wall Street. There's Niva Bupa and there is Swiggy. Now, Niva Bupa Health Insurance had a quiet stock market debut today with its shares listing at a small premium over the IPO price. So the stock listed at 78.14 rupees on the NSE with a premium of 5.59% and 78.5 rupees on the BSE, a premium of 6% compared to the IPO price, which, by the way, was at 74 rupees per share. Niva Bupa's grey market premium was very low at just about rupees 1, which suggested that the stock listing would, well, be more or less flattish. And there was honestly very little activity in the grey market during most of the IPO period. Now, on the other hand, Swiggy's share price continued its upward trend today, marking a second consecutive day of gains after listing. The company had a strong debut, remember, on the 13th of November with a 17% premium over the issue price, so much better. But earlier today, the stock also surged another 7% and a new high, though, of course, considering that it's only day 2 of trading, every price will be a record high for the stock. But yes, 489 rupees. And interestingly, though, the big headline is that this new kid on the block saw its market cap go to 1 lakh crore rupees, 25% rise in total from the issue price. But eventually, of course, it succumbed to the overall weakness in the markets, and eventually the stock did trade a little lower and lost that momentum and that gusto of sorts. So yeah, eventually the stock price of Swiggy did go a little lower in trade. So that's, of course, about the new kids on the block. And meanwhile, the NSE FNO list has expanded. So the stock exchanges announced the inclusion of 45 new stocks in the futures and options segment, which will be available for trading starting 29th of November. And some of the notable names are stocks like Zomato, Geo Financial, Paytm, Delivery, Avenue, Supermarts. So there's definitely a huge expansion of FNO eligible stocks. And the NSE said that it will clarify on details like market lot sizes, strike schemes, quantity freeze limits with these new stocks in a separate circular on the 28th of November. Now, the significance of this is, of course, that FNO traders get a whole new list of stocks to then trade with. But more importantly, this move gives India's benchmark indices, the Nifty Sensex, the opportunity to add these companies that have now been included in F&O in their indices as well, because this is something that's a precondition before companies are added onto the indices. Gold prices on the CX, meantime, opened sharply lower. There has been overall weakness in gold prices. There's weakness in international gold prices, which hit a 2-month low thanks to the fact that the US dollar only keeps rising. Even silver declined by about 1%, pardon me. So gold and silver continues to trade lower. And meanwhile, inflation, on the other hand, does not seem to be stopping. A sharp spike even in the wholesale inflation in October. The annual inflation rate stands at 2.36% versus October 2023. And for food inflation, a very important component of the basket, and of course for people like you and me, 24.38% is the weightage for food inflation, and it stood at 11.59% in October, up from 9.47%. So you can imagine the kind of increase in food prices that ordinary people are going to be seeing. So primarily driven by food prices, food product manufacturing, machinery and equipment production as well, by the way, saw an increase in inflation. Well, those, of course, are the top headlines for today. But without any further ado, let's kickstart our topic. It's, of course, the occasion of Children's Day, and we thought, as a part of the Daily Finance Wrap team, what better than to consider the topic of inculcating financial wisdom and prudent money habits in your children. Our children are, of course, fast learners, sharp, tech savvy, observant. They pick up habits faster than we can imagine. A sense of need, wants, lifestyle, all of this is picked up at a very young age. And unfortunately, financial literacy is a topic that's not discussed enough. Most of us don't discuss money on the dinner table. It's really our responsibility to make children financially competent. And that's why we are taking this occasion of Children's Day to encourage you to engage in the topic of finances with your children. Are the days of keeping piggy banks still an option, or should you get them familiar with discount broking apps? What financial instruments will be easy for kids to understand? We'll be discussing all of this and more with Mr. Suresh Sadagopan, who is a SEBI registered investment advisor and the MD and principal officer of Ladder7 Wealth Planners, and an author of a book called If God Was Your Financial Planner. Hi, Suresh. Welcome to the show, and thank you so much for joining us today.
Thanks, Movina, for having me here.
Suresh, when it comes to money, all of us tend to be hesitant of how much to share with your children. How much financial information should your children have when it comes to personal finance? And what would be the appropriate age for your kid to open a bank account? So all of this is information that we ideally like our children to have, but we, sometimes are hesitant as to how we should kickstart this conversation. So I think firstly, if you could give some tips to parents, that how should this conversation even begin in the first place?
So I'll talk with a metaphor. So suppose we have a piece of land. We first have to clear the land and then till the land, and then we can sow the seeds, right? So just like that, in the case of the kids, if we say that we have so much money, and the kids don't understand what is the context of that, then it will all go wrong. So the first thing that I would say is that they will have to understand, all the concepts about money, all the things that they need to know about what money can do for them, and the concepts like inflation, interest, and various other things before actually one discloses the quantum of money that one has. In fact, if you ask me, the quantum of money that one has is not really a very material fact, because if you say 10 lakhs or 10 crores, they don't have a context to what that actually means. So we need to be able to tell them that what we are broadly doing as far as our finances are concerned, and how we are going to help them, and how we are going to help the family with whatever we are earning. So basically, anything after 10 years only, we will have to start exposing them to any amount of money that you are having. And before that, like I said, like tilling the land, you have to put into them the basic understanding of savings, inflation, goal planning, budgeting, I mean, being responsible with money. So those are the kind of things that we will have to do. Now, as far as the bank account is concerned, I mean today kids' bank account can be opened, but again they will have to understand enough so that, I mean, you can have a bank account and they will be able to properly interact with the bank account and all that is required in a bank account. So I would say an appropriate age would be something like 10 years or more. Then at that time, if you open a bank account, they will understand. I mean, slowly you can expose them to the concept of banking, saving money. You can introduce them to broadly the product called savings account, FD, and things like that. And slowly and steadily, you can talk about other products as well. So it has to be a nuanced approach as far as children are concerned. If we are going to drop everything all at once, children are going to find it very difficult. Probably even in terms of the portfolio that you have, I think slowly and steadily only they will have to be exposed, and probably at a later age it is that is when you will have to expose, not at the earlier age where they don't have a context.
So, there's this saying, right? Teach a man to fish. So, if I want to get my child to do the activity with me, because that's the best way that he or she can learn. So, in terms of activities, is there something that I can make my child do? Like, for example, fill out a bank account opening form, or maybe some activity like that to begin with?
Yeah. So, I mean, a lot of us have this thing called Monopoly or trade in our homes. Okay. That's actually a fun game, and a lot of us have played in the past. And that's a very beautiful game where, I mean, you are exposed to the concept of acquiring assets, getting rent payments, you are selling the asset, you are buying the asset, you are exchanging money. In fact, a lot of learning actually comes from these kind of games. So if you're able to get games which kind of teaches them what exactly is the value of money and what you can do with money, I think that's a fun way of actually introducing the children to money. The second thing is, I mean, if we are able to take them across to a bank along with us when we are actually doing our chores, they will also observe and allow them to actually do a few things. I mean, we know a lot of parents are generally very protective and they say that, okay, you don't worry about money, I'm going to take care of that. See, that's not a very great approach. I mean, you allow them to understand what this is all about. I mean, allow them to fill a deposit slip, or allow them to fill a check, allow them to take the money from the teller, allow them to withdraw money from a ATM. So, I mean, only then they will be comfortable with the idea of money itself. So, one of the simple activities is taking them to a bank from time to time, allowing them to deposit on their own. They will go deposit, withdraw money. Those kind of activities they can do. The other thing which we can actually do, simple thing, and when we are taking them to a shop, we can tell them, okay, now here we have bought all these things. Now verify the bill. Okay, have we bought all the things? I mean, all the things that 20 things which we have paid for. Now, what is the payment? Now, can you make the payment on your app? So today, children are very, very savvy, and if you allow them to pay from the app, it will be a super thrill from their point of view. So these are very, very simple, basic ways by which you can actually get your children interested in finance instead of driving them away from money and money matters.
Yeah, and sometimes, when we have this, we put this entire stigma in the child's mind about money, then they too tend to get a bit more overwhelmed. So it's, about simplifying it as well. And perhaps when they will do the activity themselves, like Suresh mentioned, right? Simple activities like checking a bill or taking them to the ATM and showing them how it's done. But of course, very important that your child does not go around sharing the ATM password with all of his friends or her friends, because
Yeah.
that's also a very important aspect, because privacy is very important. So, actually, Suresh, let me talk to you about that privacy, because as children, of course, I don't blame them that they'd be excited to tell their friends that, I did this activity. So, it becomes a question of privacy too. So, a follow up on that, Suresh, how do you maintain that thin line then?
Yeah, I mean, you are absolutely right. I mean, privacy is a very, very important thing. You had earlier asked me about opening a bank account, right? So it may be a great idea for somebody to open a bank account, and of course, appraise the child about the perils of sharing all these passwords and user ID and things like that. But if you are giving a child a bank account and the ability to withdraw, so keep the amount in the bank as low as possible. So even assuming the child is not very discreet and shares the password with somebody else, the exposure is limited. But even assuming there is an accident like that, I mean, every experience is a learning process, right? So I mean, you don't have to expose your own account. You can expose that other parallel account of the child where there is not too much money, maybe 2 3,000, maybe 5,000 rupees. And even if there is an exposure, I mean, it is only to the extent of that 4 5,000 rupees. So I mean, learning can happen. You will have to educate the child properly, and you have to hope that the child will understand all this, internalize all this, and act in the right spirit. But accidents can happen, and that is why that special account of the child will be very very helpful in terms of them learning at maybe not too huge a cost.
Correct. So the child's account, where obviously it's there's going to be not a very huge amount, a nominal amount, is where perhaps you can afford your child to make some mistakes. Ideal is, of course, no mistakes, but yeah, I mean, children are children, and you do not want to spook them too much either. So it's important to ensure that you strive for that balance. And Suresh has given some great starter tips. But of course, Suresh, I think as parents, teaching your children to be financially literate is one thing. Paying for their education is something that's more of a mammoth task. I mean, this inflation print that I just read out extends to even education, right? Because today, if food prices are high, then everybody has to pay for their food bills, and eventually it's a trickle down effect. So you're going to see an inflation. There's no denying it. And yes, the cost of education today is far higher, in fact, than standard inflation as well in many for many boards and for in many cases. So, for education, what are the top ways that parents can save up and ensure that their child can tomorrow pursue whatever they want? And money is not the holdback factor.
Yeah, so the first thing as far as education funding is concerned is that the parents have to start saving from day one. Because see, like you rightly pointed out, the amount of money required for education funding is actually ballooning, and the education inflation is actually ahead of the general inflation. So we have to be very very careful about it. So I'm talking about college education, but things are not really very easy as far as even the school education is concerned. And the aspiration of the parents, if you take that into account, and the aspiration of the child also, if you take that into account, a lot of parents want to put their child in very good schools. Sometimes they call it international schools and things like that, with fancy classroom, fancy facilities, and things like that. But the whole point is, I mean, these things have become very very costly. So it may be starting at maybe 2 2.5 lakhs and going all the way to maybe 5 6 lakhs or even more. So if one is having one child or maybe two children, we are talking about substantial sums of money only for the basic education. And then we are talking about college education. We are when somebody comes to ninth standard or 10th standard, there are extra tuitions which parents tend to allow their children to avail of. And then 11th and 12th, again you have I mean those what do you call that? I mean, you join something like a PACE or some one of those foundations, and you are taught there. So it costs you maybe 3 4 5 lakhs in that also. So where you want to try for competitive exams like IIT or anything else. So education is very very costly. One of the things which I would definitely ask the parents to think of is what is that they want from education. So lot of times parents are not really very clear. They are actually swayed by their own peers and people in the society. See, if you really look at quality of education, I mean, I'll just give an analogy of a Kendriya Vidyalaya. A Kendriya Vidyalaya is a great school. I mean, from an education perspective, from the teachers, teaching quality, from the board, and all those kinds of perspectives, it's a great school. And that may not cost you too much. Okay, it may not have all the trappings of a international school like a AC classroom and certain other facilities, but from the point of view of basic education, I think it will be very very good. So parents have to be slightly practical about this, and they will have to have that conversation with their children about what is education, why it is important for them to have a good education versus a fancy kind of education. And as far as at an appropriate point, which may be 7th standard, 8th standard, 9th standard, during that period, I mean, the parents have to again, based on their income status, based on their wealth status, they will have to have an appropriate conversation with their child, very, very clearly explaining what they can do and what they probably cannot afford. In which case, the child will have to take a loan, or child will have to self-fund certain portions by, especially when they are going abroad and things like that. They will have to work for it, and I mean, they will have to fill that gap in that manner, or seek scholarships. So these conversations have to be had, I mean, right upfront. So setting expectations to their children is also one of the very, very important things that I feel the parents have to do at an appropriate age. So all these things put together can help in the education funding without too much of a problem.
I think you've made a very valid point about parents as well, sort of understanding what comprises a prudent, sum of money to pay for education. Yes, you have, of course, immense and unconditional affection for your children, but more often than not, education costs much more than an arm and a leg. It's something that really drives people to be plucking out the last bit of their pennies, and you have to think, is it even worth it? Is this going to matter maybe 15, 20 years down the line? So you have to look at it also in a rational manner. Remember, folks, we'll also be answering any questions or queries that you have, so please do keep sending them in. You can comment in the YouTube box right there. Now, Suresh, let's talk about investing in the name of a child, a minor. So let's explain to our parents. Firstly, can they open a demat account in their child's name? And also, what are the pros and cons of investing in mutual funds in your child's name versus perhaps in the parent's name, and then later passing it on to the child?
See, for the most part, most of the investments can be done on the child's name along with the parent, typically as a guardian. So there are two parts to it. So if a lot of parents invest in the child's name because they feel that they need to invest in the child's name because only they want to fund the child's education or anything, and for that they want to keep that asset. So that's a kind of a mental construct where they are dividing the money into multiple buckets, and one of the buckets is the child bucket, and that is why they are opening the account in the name of the child. And if they are comfortable with that, that is okay. There is incidentally a benefit with that approach, and that benefit is if it is in the child's name, the child, once the child turns into a major, at that time the entire amount goes into the child's account. I mean, it becomes part of the child's estate. So in which case, at that time, if they are taking out the money and using it for the child's education, then it is much more tax friendly for the parents, as opposed to having the money in their account, because they will have so many sources of income, and whatever money they are taking out, the interest income or whatever they are taking out, may add to the income, and there will be a tax implication. So that is definitely a pro aspect as far as investing on the child name.
Yeah, tax implications. Actually, it all more or less boils down to that, honestly. I want to talk to you about two other products that are there, and there is the NPS Vatsalya scheme, a pension scheme of sorts for Indian minors. Then there's also the Sukanya Samriddhi scheme, mostly for the girl child. I wanted to get your opinion on these products, especially because they are labeled to be around children.
Yeah, NPS Vatsalya is a wonderful product. The only thing is, see, this is not for planning education, or this is not for planning their marriage, or I mean, those kind of things. This is essentially to give them a leg up as far as their own retirement is concerned, because this is a very, very long-term product. You start off with the product, and then the child can take over from at a certain point when they start earning. So that kind of approach, if the parent wants to have vis-a-vis the child, I mean, that retirement funding, then NPS Vatsalya is a great product, because in between, if you take out the money and things like that, 80% will have to be uh, uh, will have to be you only 20% can be taken out. So that may not be what the parents may have in mind if they are actually trying to fund their education. Whereas coming to Sukanya Samriddhi scheme, so this is actually a wonderful scheme for the girl child. If anybody has a girl child, and I mean below that threshold, they can start the Sukanya Samriddhi scheme and invest up to 1.5 lakhs in that scheme. And again, after 18 years of age, uh, whatever is accumulated in that account will go to the girl child, and it will not add to the kitty of the parent. And this can be used for typically education, or later on for marriage. It can be used from that point of view. And the parent who is also contributing to this scheme can also avail of section 80C benefit up to the limit of 1.5 lakhs overall. So this is a wonderful scheme which is available. I mean, it has been available for the past, I think, 5 6 years now, and this is a wonderful scheme to take advantage, if especially if one has a girl child.
All right. Okay, so I think we've covered all the broad concepts of when it comes to saving for children. Just to, for the benefit of all of our viewers who are just joining in, Suresh, yes, start by playing Monopoly with your child, bring out that board game. But apart from that, what are the kind of concepts that kids should be made aware of while we begin this financial literacy journey?
Yeah, simple concepts like, I mean, if you want to buy something, you first have to save, and then after saving, you can spend. They have to understand the concept of inflation. I mean, it's a very simple concept. What you can buy today, you may not be able to buy tomorrow. You may be able to buy less of it. So this kind of a concept has to be made. They have to understand this. Then the simple thing like compounding is something that they need to understand. So they also need to understand that there are multiple different products which are there. They have to understand why savings are important, why investments are important. Parents keep saying that money does not grow on trees. I mean, that's a very broad concept, but you have to actually break it down for them and say why do they say that, why they have to put aside some money. So what are the goals for which, I mean, why do you save? So what are the goals? What does that goal mean? So one of the goals which the child can understand is that they are spending for the vacation, they are spending for their education, they are putting aside money for their college education. So they can be made to understand what those goals are. Then, I mean, at an appropriate age, what is an interest, what is a dividend, all those things. I mean, one can talk to the children. And then the family budgeting, how much is coming in, how much is coming out. If they are comfortable exposing the child to actual incomes, they can do that. Otherwise, they can talk hypothetically about a certain amount coming in, certain amount going out, certain amount getting into savings and things like that. So it should start early on. Each child is different. Basic concepts can be taught from early age, below 10 itself. And experiential learning is the best way of I mean, helping the child to learn the basic concepts. One can take, like I said, to the bank, to various places, to the shop, ask them to pay the bill. I mean, these children are very savvy. They can easily, it will be a good thrill for them to pay the bill, electricity bill or other things, which, I mean, we people find it to be such a bore. For them, it's a thrill. So if we involve them in all these kind of things, over a period of time, they will learn all the basic concepts, and hopefully they'll pick up from there and become financially savvy.
So getting them to do monetary tasks kills two birds with one stone. Your list of chores gets lesser, while they also, of course, get
Yeah.
to learn, how to deal with the day-to-days of life, which will, of course, come on them too very soon. We've got a viewer question coming in, Suresh. We have Ro asking, my child is 5 right now, and I want to save a corpus of 1 crore by the time she's 18. So he's looking at 13 years. So he's asking, Suresh, what's the best way to plan for this?
See, there are multiple ways to plan for it, but if you have a duration of something like 13 years, one of the good ways to plan for it is through an equity oriented investment. So I'm not really talking about direct equity. I mean, as an advisor, we don't suggest direct equities. We suggest typically equity oriented products like mutual funds. So you need to select an appropriate mutual fund, and then if you continue to invest on a long term basis with that mutual fund, of course, I mean, you have to review the portfolio. I'm not saying you invest in that and forget it. You have to review that from time to time. If you are able to do this thing, it's fine. I mean, there's a lot of information available about various kinds of mutual funds. If you are not in a position to do that, you will have to find somebody who's a professional to do that. So the best way to invest for the child from the long term point of view will be through typically a equity oriented product. Certain people also invest through real estate. In the case of real estate, things are slightly complicated. in the sense that there is no price discovery, and real estate in various parts of the country, I mean, somewhere it may go up, somewhere it may not go up at all, somewhere it may go down also. So it is not a very it's not very clear how the real estate will perform over a long period of time. Though broadly speaking, you should be able to get some returns, but exactly how much return we don't know. In the case of equity, it is reasonably clear, like 15-16% kind of return compound annual growth rate we are able to see in Sensex, even Nifty, over a long period of time. So Sensex came into existence in 1979-80. From there, 15.5% is what we are getting. So I would definitely vote for equity oriented product. If I were you, I would put my money in an equity oriented product.
Equity oriented products are the way to go to create long term wealth, to perhaps counter some of that inflation as well that we've been witnessing. And I think with that, we are at the end of the show. Suresh, this has been very insightful. Well, I think that we can just take on board this one extra question because I think it's very relevant. Ashish Thakur has asked us, can you tell us about the taxation that minors' investment returns can be subject to?
So whatever minors are going to earn, that will be clubbed into the parents' earning, because ultimately all the investments are going to come from the parents only. Normally, minors do not have any particular source of income. So my suggestion as far as investments for minors are concerned is that, see, you are investing in the name of your son or daughter, essentially to fund something in the long term. So my suggestion would be not to invest in a product where which does not give you regular returns, which will add to your my suggestion would be to invest in such something where I mean, cumulatively you can take it out when the child becomes a major, and it can be used to fund something productive like education funding or something else important for your child. So that is what I would suggest. But otherwise, to answer your question straight, it generally gets added to the income of the parent.
Okay, understood. All right, that was just an important point I feel that we should have addressed because we spoke about taxation very briefly when it came to investing in your name or your child's name. Well, that brings us to the end of this conversation. I hope it's been a very insightful one for our viewers. I'm sure it has been actually because we gave them very concrete steps on what they should do starting from tonight, parents. So, Suresh, I appreciate you joining us on the show with your valuable insights. Thank you so much.
Thanks a lot, Mubina.
All right, and that brings us to the end of yet another episode. Remember, equipping children with financial literacy skills is an investment in their future well being. You're instilling an understanding of money, saving, budgeting, and wise spending early on. And with that, you're empowering them to navigate the complexities of the financial world with confidence. Remember that, of course, it's essential to handle the matter a bit more delicately because, like we mentioned with Suresh, you don't want your children leaking out data that's private and confidential with respect to your finances. Well, anyway, that brings us to the end of yet another episode of Daily Finance Wrap. Remember, you've got to tune in to Personal Finance TV's YouTube live every day at 5 p.m. And same as tomorrow, we will be back with yet another episode. Until then, thank you.